Hi everybody, welcome back to another video in which I want to talk about Google stock specifically, and their news release from yesterday about their quantum AI chip. So without further ado, let's get started. Alright, I think I made a couple of videos on Google's stock in the past. As you can see, I've got a lot of things to talk about in this video. I want to be fully transparent, so let me maybe start with that. I do own Google in my position as of today. As of right now, it represents a weight of around 5.5% in my portfolio. Quite frankly, I've only bought Google during the COVID crash, so pretty much exactly in March 2020, and have never added to it. And the stock has of course performed really well ever since, and has obviously grown in size over time. But as of today, it's not one of my largest holdings. I think it's attractively valued, and we'll get to that a little later. But it's not like it's trading at a valuation where I'm thinking it's a no-brainer opportunity. But more on that in just a second. So what made me want to do this video was the stock performance of Google yesterday. Yesterday, the stock of Google was up 5%, which was mainly attributable, I think, to the release of their Willow quantum AI chip, and basically, maybe I shouldn't say their release of the chip because it's not commercialized yet, but the outlook that the team was giving with regard to prospective commercialization opportunities in that regard. If we take a look at the long-term performance of Google, or more specifically the performance over the last year, we can see that the stock of Google has performed well. It has delivered returns of around 33%, which I'm not quite sure if that even beats the S&P's performance this year, but it should be pretty close to the S&P's performance. And just to wrap up this beginning section, I also wanted to show you the current valuation of Google's stock. What you can see here are a couple of different valuation multiples that show that the current valuation of Google isn't all too demanding. And again, I'm going to talk about why I think that is in a moment. But if we just look at the numbers, we can see that on a free cash flow basis, the stock looks actually quite cheap, but free cash flow can fluctuate quite heavily from time to time, so I wouldn't place too much emphasis on that. I would assume that that is most likely due to depressed margins over the last 12 months. On a EBIT multiple basis, for example, on a last 12-month basis, we are looking at a multiple of just around 20. On a price to earnings multiple, Google is trading at around 25 times multiple, and on a next 12-month multiple, we are looking at a low 20s multiple. So as I said, I don't think that's a particularly pricey valuation multiple itself. It's not screaming cheap either. And what I should also say, because I think that's maybe the most important part, is that obviously just looking at valuation multiples isn't doing valuation work. There's a lot more that goes into it, and a stock trading at a 20 times multiple could in fact be screaming cheap if a bunch of our other factors are true. But I'm not going to discuss this in this video. So what I also wanted to highlight in terms of the current valuation of Google is a post and a video I did on that subject not too long ago, which I talk about the so-called, or I refer to it as the quality bubble. So as my regular viewers will know, I'm incredibly focused on owning super high quality businesses, the best businesses in the world, that actually allow me to have a very low turnover in my portfolio. So earlier I said I basically only bought Google once in March 2020 and haven't really touched it ever since. And I think the stock is up close to 3x. No, close to 4x, I think, without me doing anything. And in order to do that, you want to focus on quality businesses, but obviously many quality businesses also trade at quote-unquote quality multiples, quality prices. So in this article, I highlight a bunch of different stocks that I think are quality businesses, but that are trading at prices that will most likely not lead to satisfying long-term returns. All right, getting back to Google and the big news. So I just said that I think Google's stock jumped more than 5% yesterday due to the release of their quantum AI chip, or again, not that chip, but the news surrounding that topic. So here's a tweet from Google's CEO, Sundar Pichai, and he wrote, "Introducing Willow, our new state-of-the-art quantum computing chip with a breakthrough that can reduce errors exponentially as we scale up using more qubits, cracking a 30-year challenge in the field. In benchmark tests, Willow solved a standard computation in less than 5 minutes that would take a leading supercomputer over 10, I think you say 25 squared, far beyond the age of universe. And I'm going to be quite honest with you, or before I say that, let me show you that I think these two videos released by the Google Quantum AI YouTube channel itself are particularly helpful when it comes to understanding what quantum computing is actually all about. Which brings me to the point I actually wanted to make here is, I want to be honest, I don't think I fully comprehend what quantum computing is all about. I watched a bunch of different videos, I read a couple of articles on it, and I think I have a pretty good understanding of what the long-term impact will be. But how it really works technically, I don't know, I have no expertise in that. But the way I understand it, and correct me if I'm wrong in the comments down below, the way I understand it is that if, and I'm going to show you the roadmap of Google's quantum AI computing team here in a second, but if they are able to hit a couple of more milestones and are then able to fully commercialize their product, quantum computing will just make computing way more efficient. And there's one extreme example in the presentation that Google gave that I wanted to show you here real quick. So that's this one. Let me show it to you real quick.
For certain applications, with the random circuit sampling benchmark, the results are pretty surprising. By our best estimates, a calculation that takes Willow under 5 minutes would take the fastest supercomputer 10 to the 25 years. That's a 1 with 25 zeros following it, or a timescale way longer than the age of the universe. This result highlights the exponentially growing gap between classical and quantum computation for certain applications.
Yeah, and if you think about it, that's truly crazy. If computing is becoming so much more efficient, I really don't know and fully comprehend what it would mean for the real world. And I would also like to point you to this Twitter or X thread by Kevin Joy Chen. I think he did a great job really breaking down what this technology is all about. And I think these two tweets are particularly insightful. So let me just read them to you. So he wrote, so let's talk about computer chips for a second. Chips in your laptop or desktop use bits for computations. A bit holds limited information. Why? Because it can be in only one of two states at a time, 0 or 1, and you see it visualized here. So that's a bit in classical computing. Now we're getting to quantum computing, which, if you haven't figured it out yet, where the term qubit actually comes from. So meanwhile, chips in quantum computers use quantum bits or qubits. These can exist in multiple states at a time. Qubits used together exponentially increase computational power. So good so far, right? I think the only problem the science, the research is still facing in this area is that quantum computing still produces a lot of errors. And in fact, the more qubits you create, the higher the odds of you creating an error. And Willow, at least that's my understanding, has shown that this problem can be solved over time. So let's move on. Does this news, this innovative milestone really matter to Google's business? I would argue yes and no, and let me explain why. So I was actually discussing it with my investing community, and this is what one of my members wrote. He was basically including a chart from the Gartner hype cycle, and he wrote, for me, it's a wait and see. We need to see actual use cases in the real world and actual cash flows being generated by this. And obviously he's right. Google itself has been quite vocal about the fact, and this is the roadmap they have laid out, that as of today, this technology has no real-world applications, at least not on a broad scale. However, in the interview, and that let me just show it to you again. So that's this interview in which basically 4 researchers employed by Google have discussed what the release of Willow or the news release actually means and where they see the longer-term trajectory of that field. And basically the guy in the middle, he in the video, he referred to him as the chief optimist at Google. So he is quite optimistic that not in the next couple of decades, but more likely within the next 5 years or so, we are going to see quantum computing being used in the real world. So it being commercialized. And obviously, to me, it seems like this technology is incredibly hard to build. So obviously, chips can be considered a commodity to some extent. I discussed this in many of my takes on Nvidia stock. But I think this is so complicated that Google seems to have an edge here. And I think this will turn into real cash flow at some point in the future. And not only that, maybe more importantly, and I will get to the AI disruption risk of Google in a second, but my understanding would be that obviously this new computing technology will also help to speed up progress in the AI world. And it might make Google's AI solutions better, superior to the products offerings of competitors. And obviously then everything is tied together. So I think this really is big news that fundamentally makes Google a better business. And this is what I wrote in one of my responses. So I wrote, great chart in this context. I think of it as adding more option value to Google's already quite diversified business opportunities. Before I read on, as I speak of Google being quite diversified, I think what you have to realize is that over time, Google has become less and less reliant on its core search business. As you can see, obviously today it still represents the majority of revenue, but as of today, I think that's based on 2023 fiscal year numbers, Google's search business, again, quote unquote, only represents 57% of Google's overall revenue, which means that other parts of the business are becoming more and more important. And this development, I think, will only speed up over time. If we look at Google's cloud business, for example, in the most recent quarter. So in the most recent quarter, cloud has performed incredibly well. It grew 35% revenue on the last 12 months, year-over-year, on a year-over-year basis. And the margins, so the actual profits produced by that business segment, have also been increasing. So over time, I expect Google Cloud to represent more and more of Google's overall revenue. So the cloud business posted revenues of 11.4 billion. If you analyze that, we're looking at something like 50 billion-ish US dollars with an operating margin of 70%. Operating profit increased sevenfold. So that's really astonishing, to 1.9 billion from 266 million in the same period last year. And this chart here actually shows Google's overall revenue on the very left, which is around 340 billion. And again, so cloud, as of today, if you analyze the Q3 figures, represents more than 10% of the overall revenue. To get back to my response here. So again, I think of it as adding more option value to Google's already quite diversified business opportunities. Odds of the core business being disrupted are not that slim in my view. So let me discuss that real quick. Yes, I think the AI disruption risk is very real. Everyone's talking about ChatGPT, OpenAI. Meta AI actually recently hit a big milestone. I think they reported that today Meta AI has more than 600 or close to 600 million monthly active users. So Meta is my biggest position. I'm very well aware of the ambitions that Meta has in that space. Then we have Perplexity and a bunch of other large language model competitors. And I think all of them, they are willing and committed, willing to spend a lot of money to take away some of the profit, the amazingly large profit pool that Google earns in the Google search or in the search business. And I've talked about this in some of my other videos. I find myself using ChatGPT more and more frequently. However, I will say it's not like ChatGPT is replacing my Google searches. No, it's just an entirely new search query set, so to speak. However, and I'm going to jump to another point I wanted to make. I think this might be the most important chart in the entire video. However, I don't think I represent the average global citizen, the average Google user. I feel like when it comes to the use of AI solutions, I don't want to sound arrogant, but I feel like I'm ahead of most people. I think I'm tracking what's going on a little more closely. I'm more willing to play around with newly released tools. I think your average Google user, if I think of my wife, for example, I don't think she has ever used ChatGPT. I think they will adopt these new technologies much more slowly. And by the time we will see an even broader mainstream adoption of AI tools, Google may play a more relevant role than they did when they were basically overwhelmed by OpenAI just releasing ChatGPT and it being a major success. So what this chart here actually shows is the market share of LLMs, so large language models. And as you can see, OpenAI is the clear leader here, but they are also losing market share very quickly. And when we zoom in on Google, Google's market share within LLMs has actually improved. It almost doubled. So it went from 7% to 12%. And Google, I think they are really aware of the risk, the disruption risk in with regard to their core search product. So they are doing everything they can right now. I think there has probably been a cultural shift too, because management is really realizing, hey, wait, we need to defend our position here. They are really doing everything they can to improve the product quality. Quite recently, and I'm going to show you a clip I just recorded before recording this video, they released Google Live. I think that's what they refer to that app, or Gemini Live. And in it, you can actually talk to the AI, which OpenAI and ChatGPT allows you as well. But Google is also very aggressively marketing, advertising that offering. And I think for your average person, just talking to an AI and it sort of feeling like a real conversation can be real mind-blowing and maybe convincing. I think it really is about getting people to build habits, the habit of using your AI solution early. And that is what I think Google is really focused on. So there's the risk of them being disrupted in search. However, I think if at all, that's a longer term risk. And I think the odds of Google actually being able to defend their position has improved over the last 12 months. So let me just show you that clip of Google Live. All right. Hi, Google.
Hey there. What can I do for you today?
So I'm thinking of recording a video on Google stock and the most recent news surrounding their quantum computing chip. Can you suggest some ideas how to structure that video?
Okay, that's an interesting idea for a YouTube video. There could be a lot of interest in Google stock right now, especially with the release of that new AI chip. Here's a way you could structure it. Start by giving a quick overview of Google's stock performance in the last few years and any big trends you see. Then, talk about the release of the Willow chip and why it's such a big deal, what makes it special, and how it could affect Google's future. After that, get into the possible effects on the stock. Will the chip make the stock go up? Are there risks to consider? And finally, offer your thoughts on whether now is a good time to invest in Google.
Okay, that's great. Can you now point me to a couple of resources to do some more reading on that particular topic?
Okay, for some good background on Google's stock, try the Google Investor Relations page. You can find a whole bunch of financial reports and information on their stock performance. You might also like the website Seeking Alpha. They have tons of articles and analysis on tech stocks like Google. And finally, you could check out Nasdaq. They have articles and data on Google's stock, and you can get a sense of how the market's reacting to the Willow chip announcement.
All right, there you have that. Now to get back to my response again in our little community. So I wrote, odds of the core business being disrupted are not that slim in my view, but then there's quantum computing, autonomous driving, so that's referring to Waymo, artificial intelligence, YouTube, and cloud as alternative opportunities. Some are already established, just like cloud, for example, now posting 17% profit margins. Others, like Waymo, are still emerging, and the roadmap to being fully commercialized is a few years out, certainly. However, I think all of these options sort of reduce the tail risk of Google. All right, I think I said a lot in this video now. Let me know what you think of the various takes I articulated in the video. As I said, I'm not a buyer of Google right now. I'm looking for screaming buyers. I don't think we are at such a level right now. However, I think that Google, considering its quality, is certainly cheaper than many of its quality peers, so to speak. Okay, that's it. Take care.